What's up guys, how are you all doing? I'm back again with this month's update on the UK housing market. I hope you're all doing well. As always, if you find this video useful, drop a like, share it with a friend and all that good stuff. So let's get straight into it. Looking at the headline summary figures, the current UK house growth for the 12 months to May 2021 is 4.7%. That's up on last month, which was 4.1%. So still really strong growth going on in the UK housing market in terms of price growth. Demand for homes is slightly down. It's up 26% in the year to May. Last month, it was slightly above this at 29%, plus 29%, but you know, it's a small 3% difference, guys. We're still in record high demand territory, guys. We haven't seen demand for property like this since pre-2008. Demand is still absolutely booming. Supply is still in line with last month. It was minus 2% last month and it's minus 2% again this month. So still an undersupply of houses compared to an overall huge oversupply of demand for homes in the UK. So what I wanted to do is delve into the price growth figures a bit more. This is a really interesting graphic that you see on your screens right now. Don't forget that these stats are modeled on the top 20 cities in the UK. So it's not every single city in the UK. So bear that in mind when we're looking at this, but it is representative of the UK to an extent. So we know already, if you've watched my previous videos as well, that prices are being supported by elevated levels of demand, and a lot of this elevated demand is being caused by the stamp duty exemption or holiday, as I like to call it, which is ended on the 30th of June. It's also been supported by the 95% mortgage guarantee scheme, which was introduced by the government in April, as well as the coronavirus, where we saw a lot of people basically searching for space. People were getting out of crowded, or what they perceived to be crowded cities, and searching for homes, larger homes in areas of the UK that are more spacious and less urban. So people are going basically a migration towards suburbia in the UK. And as a result of that higher demand, that has pushed up prices. So imagine you have a house and it's on the market for, I don't know, say it's on the market for £400,000. 2 years ago, you might have had, I don't know, say 5 people come and view it. Now, with this unprecedented demand, you might have 10, 15 people all trying to view and bid for the same house, which obviously is going to bid the price up. And we've seen this across the UK over the past 12 months. And these bar graphs here are very interesting because they show the minimum and maximum growth ranges of houses in particular regions of the UK over the last 10 years. So we're talking about from 2011 to 2021. So for example, if we take London right here, we can see that over the period between 2011 to 2021, at a minimum, the lowest rate of growth in London has been minus 1.2%, and the highest rate of growth in London has been 19.7% over the last 10 years. And if we look at the northwest, where all of my properties are, the lowest over the last 10 years has been minus 2.8%, and the highest has been 6.3%. So that's what these boxes represent. Now, the purple dots shows where we are in relation to growth in these regions over the last 10 years. So for Wales, for Yorkshire, for the Northwest, for the East Midlands, West Midlands and the Northeast, we are currently at the highest ever levels of growth seen in these regions right now. And a lot of that is due to the unprecedented high demand for property in these particular regions. So in summary, it's a really good time to be buying in these regions of the UK. When we go down to the opposite end of the scale in London, we're at the bottom. And we mentioned just a few moments ago that people are moving out of London, capital cities, to move to regions of the UK where there is a lot more space. There's been a net outflow of people from London. I think it's in the order of either 400,000 or 500,000 people over the past 12 months have left London. So people aren't demanding property in London. They're actually moving out of London to other regions. And I think that goes a long way to why we're seeing low growth in London house prices in relation to the last 10 years. And these numbers right here are very interesting. What they show is your household income needed to buy a property in these particular regions. Roughly speaking, a mortgage lender is going to lend you between 3.25 and 4.5 times your salary to buy a house. Obviously that depends on your credit history and other factors that go along with that, but that's a rough guide. And what we can see is in the regions of the UK where house price growth is the healthiest, those are actually the cheapest properties. And the most expensive properties are actually facing, with the exception of Scotland, are actually facing the lowest rates of growth in the UK. So something to think about, guys, if you are looking to invest in property or if you're actually looking to move. Keep this in mind. And some more information, guys, that's quite interesting in this report. As the prices of homes in the UK go up, because we're experiencing, you know, a lot of healthy growth in the UK property market, that means that properties are now moving up in terms of stamp duty bands. So you're going to pay more tax on a property that was previously in a lower stamp duty band, but because of the increased demand and the pushing up of prices of these properties, they're now going up into higher stamp duty tax bands. So currently in the UK, any house up to £250,000, if this is your first home, you're going to pay 0 stamp duty tax. If your house is priced between £250,000 to £925,000, which is a vast majority of us who are buying houses, you're going to pay 5% in stamp duty tax on your first home. And from £925,000 to £1.5 million for the super rich out there, those of you eating caviar, with super yachts, you're going to pay 10%, and anything above that is 12%. So let's focus on the 250,000 to 925,000 bracket. We can see right here that over the last year, 11.8 million homes in the UK. That's a lot of homes, especially when you consider that the population of the UK is, I believe, 68 million. So this is a lot of homes in the UK have been pushed up a band into that tax bracket of 5%. So a lot more money in the government's pocket. They must be fist pumping each other down in Westminster right now with all the money that's going to be coming their way. Moving on, related to demand, we can see that the average time to sell a property in the UK is 22 days, 3 weeks. That is insane. Fastest moving market in 5 years. And we can see the trend right here. So 5 years ago, 32, 34, rising up to 54 in the year to May 2020, and then a year later 22 days. This actually surprises me. I didn't know that the average time to sell a house in the UK was, actually I take that back, 2 months, 1.5 months is I guess a reasonable amount of time. It just feels like to me that I've got lots of friends who have sold houses and seems to take them a lot longer. Let me know what you think in the comment section below. But even at that peak of 54, so we're talking 1.5, just over 1.5 months, that still seems pretty quick to me, but I can't argue with the data. Let me know what you think in the comments below. So then going down to a breakdown of the cities in the UK. If you can remember last month when we looked at this, the top 3 were Liverpool, Manchester and Nottingham. Liverpool was 6.9%, Manchester was 6.8% and Nottingham was 5.5%. So we have seen a movement in these tables and an increase in these numbers. So Liverpool has gone up from 6.9% to 7.9% and remains first. Great growth. I've got 2 properties there. If you do as well, congratulations. Manchester has raised from 6.8% to 7.2%. Again, growing still amongst all of this demand. Sheffield, another city where I have properties. I've got 2 cities in the top 3. I am gassed. Sheffield was in 5th place last month at 5.5%. It's now at 6.6%. Long may that continue. And then Nottingham, Belfast is an interesting one, and Leeds. So again, consider these regions, guys. They are growing, and there's a lot of overseas investment going into these areas, especially in developments. If any of you have been looking in these areas, you might know that already. If you don't, it's always a good sign where you see foreign money going into, piling into particular areas, because that generates a lot of growth for people that own there already. So now let's look at some articles related to property that I thought were quite interesting that you might be interested in also. Lloyds Bank are going into the property business. They are becoming landlords up in Peterborough. They've acquired a block of 50 flats and they're going to manage the those residential units through a subsidiary of the bank. This is interesting to me because having worked in banks for the last 13 years now, you don't see banks really diversifying into property portfolios. They might have property on their balance sheets if they've extended mortgage loans or mortgage type products to, you know, owners and buyers who've not been able to repay them, and then they repossess the flats, but they usually try and sell them as quickly as possible. I've been involved in quite a lot of those recovery sales, especially in the 2008 to 2012 period. But to voluntarily and willingly set up a division that's going to be in the property division is very interesting, and that tells me that the bank, and Lloyds are a big UK bank, that they see property in the UK, up north by the way, as a viable and appealing area of business for the bank to go into. And I do wonder whether we'll see more banks go into these types of investments in order to diversify their streams of income, and obviously that would have a positive effect on the UK property market. We're also seeing, and this was a very interesting one also, that the Mortgage Works, who are a mortgage lender, are going back to 80% loan to value lending. So they're lending 80% mortgages on properties, but only if the property has an energy performance rating of C or above. So the property has to be energy efficient. What does this mean for you and me? Well, we're seeing a more of a relaxation in the lending criteria of banks. During Corona, they tightened their criteria, so they were looking at LTVs at 70, 60%. A lot of 80% and above products were just taken off the market completely. I remember that vividly. So now we're seeing those criteria relax a bit as the economy returns to normal. Look at the rates. These are very appealing rates as well. We know that the Bank of England rate is at a record low. 2-year fixed rates starting at 2.49% and 5-year fixed rates starting at 2.99%. That is appealing, guys. Of course, we don't know if the base rate is going to go down lower than it is, and these rates could come down further. But relatively speaking to what I've seen in the mortgage market over the last 5 years, really good rate and very appealing to borrowers. So guys, that is a summary of this month's UK property market. I hope you found it useful. If there's any other areas of property or any types of videos you'd like me to do, let me know. Please do consider dropping a like and a comment, and I'll see you guys next month.